Hello, Jim Adams here from the Easy Investing Income YouTube channel. Well, it's official. We're in a correction. The market, I believe, is down at least 10%. I believe the NASDAQ is down over 16%. So I want to share with you today how I'm dealing with this down market, how I'm able to sell options and continue to do fairly well, even though the market, like especially today, is down I think over 700 points. So in this video I'm gonna go into the changes I'm making in my option selling, especially during this trying time, as well as looking out into the future. Hopefully we'll come out of this and we'll have an upward trending market. Typically, that has happened. And one of the worst things you could do is actually sell at this time. So, and I found selling options, I've been able to keep a lot more cash. So I'm not being hurt as much as I have been in the past, mainly because I have a lot more cash. And I do have some positions that are fairly deep in the money, but I do have some plans for managing those. So I've got a lot to cover at the end of the video. I'm actually going to talk about and share kind of long term what I've done with Cisco, Intel, and Corning. And these are three of my favorite stocks to sell options on. I'm going to go into them and I'm going to share with you, you know, what I've done since I started this journey, and I'm going to do it from a different perspective. In the past, I've done kind of monthly reviews on how much cash I made each month. I want to show you these kind of all the trades that I've made with each one of these since I started trading in them. So that'll be at the end of the video. I encourage you to stick through this beginning part. I think you're going to find that real interesting. So let's go ahead and jump into it. As always, I am a firm believer in sticking to value companies that, just like the ones I show in this PowerPoint. Cisco, Intel, and Corning are three great value companies. They all pay dividends. They're all paying over 3% or close to 3%. I think Cisco's like 2.8% in dividends. Intel's actually like 3.2, and Corning I think is like 3.4, maybe as high as 3.6. And then what's nice about that is they don't move as much. They're a little less volatile than some of the other stocks, but overall typically they don't move more than 10 or 15%, especially during a correction. Another thing that I've mentioned before, I typically like to use what's called the 20 delta, 80% probability that the stock will expire outside the money. Well, during these trying times, I'm looking at maybe reducing that, maybe doing a 15 delta or maybe even a 10 delta, at least until what's going on with Russia kind of calms down and the markets kind of get back to more of a normal feeling, which may mean I need to lower my goals a little bit. So I'm looking at potentially switching from 20 to 15, but if you're really nervous and scared, you could even switch to 10. But I wouldn't give up selling options at this time. I think it's still a very good avenue to bring in extra income, and in some ways, it's a lot less risky than trading stocks. After a correction, if I had bought the stocks at a higher price and say they go down 10 or 20%, you're actually taking those losses at that time, especially if you sell. One thing that's really important, and I've done this in most of my accounts, is I like to disperse the expiration days. I try not to have too many expiring the same day. Now, I do have 6 or 7 that are expiring March 18th. I've rolled everything for February, and 4 or 5 of these I think are in the money, meaning the price of the stock is currently below, especially for puts, below the current strike price. Now, when I initiated these trades, it was at prices that I'd be happy to own them at, and even though they're pretty cheap, if I can't roll it, I probably will be fine with assignment. Then I can start selling covered calls on them, and then add in some farther out expirations. You could look at doing 6 months out, 3 months out, maybe even doing a leap to add a little bit more income to get you through this trying time. And then it becomes really critical to manage your trades, to do things like rolling and closing, so, and always doing that before expiration or an ex-dividend date. I've talked about that in a number of my videos. The only times I've been assigned recently in the last 2 years is related to ex-dividend dates. So I encourage you to to always try to manage your trades before those ex-dividend dates as well as the expiration days. So I usually start planning 2 weeks before the expiration day, and then also look at to see within that same time period within that week or two if there's an ex-dividend date that I also need to manage. Um, and then I also close, like in my monthly worksheet at the very bottom, and I forget to share this with people sometimes in those videos. If anything is above an 85% profit, I will go ahead and close it. And so I just mark that as the total number of the total amount of premium that I paid to actually close those specific positions. I think last month I had 4 or 5. I believe the previous month it's usually between 5 and 10 positions that I end up closing, and that I have found has given me a little bit more profitability. So that's something else you can look at doing. With the market down so much, I also noticed all my covered calls have become fairly or far outside the money. And actually, some of those I'm hoping within the coming days I'll be able to close them. And then when the market starts trading up again, I can actually sell more covered calls in those specific stocks or ETFs. So, that being said, as always, please hit that like button and subscribe. And I always like to mention I do have a Patreon or a group of Patreon memberships. I've got 2 different levels. I encourage you to take a look. You at the what I call the investors level, you actually will get my trades every time I make a trade. I post it out on Patreon. I also will put some special content out there, and I also share all my spreadsheets. Um, so, and if you need something that I haven't put out there, I can also put that out there. And I'm trying to add additional content. So that's the Investors Club. That's like $10 a month. I have a more expensive one that you also get Discord, and you get a weekly meeting where we'll talk about what we're looking at investing, what we're doing about our current positions and our current trades. So I encourage you to take a look. I'll leave a link down below. So that being said, let's go ahead and jump into the second part of this video where I share with you 3 of my favorite stocks, which are Cisco, Intel, and Corning. And I'll talk about how I've done not just in a particular month, but since I started trading these. So let's go ahead and get started. Thanks for joining me. Okay, now I've opened the first spreadsheet. It's pretty much what I did is I went into my Schwab account and I exported the history for the specific options. It's not something that's too difficult to do. So I've exported all my Cisco trades, and I've also done that for Intel and Corning. So here you can see I've been trading Cisco going back all the way to September of 2020, and these are all puts. Um, so I've been able to roll. I've had a couple of instances where I'm not sure it ever got completely in the money. I think there was one point, maybe this back in March of 2021, where it was near the money, but Cisco had stayed out of the money for the most part. So doing the 20 delta has kept me, able to pretty much stay out of trouble with it and earn some pretty good premium. So since September of 20, I've been able to do 11 put trades. I made $744 with it. I've not done any leaps with Cisco, which a lot of the other stocks I have. Um, and if I end up deep in the money, then one thing you can do is you can, do something a little bit farther out. Like I mentioned earlier, you can do you could do an expiration 3, 6 months, or maybe even a leap, which is more than a year and I've done that in a couple of instances. I've done that with ARC to stay out of trouble with it. Um, so you can see month after month, I've sold additional ones. I've closed them. You can see the ones I've rolled or where I've actually taken losses. I won't go into a whole lot of detail with this, but I just want to show you I've been doing this month after month. The latest ones that I've done, which was just yesterday, I believe, I actually rolled it, and actually, no, it expired. It expired on 2/18, so I opened 2 new positions, and I did buy that outer arm, which during a really trending market, it is a good idea to buy the outer arm and turn it into a vertical credit spread versus the cash secured put. And that's what I've done here. And I literally just rolled it with the 50-40 strikes. And I've been doing that for a while now. I did thin the margin out a little bit. It was 50-37-50. This last one I did was a 50-40, and I took some good premium with it. Looks like what's the total? I look on the bottom. I think it was like 130. So and then one thing I did want to mention with this is the original price when I first did the first option was 41, so it was considerably lower. So this is one stock maybe I should have bought it back in September, and I would have done quite well with it right now being 53.75. So in a way I did make, if you divide this say by 100, it would be 74, not $74, $7.44. Um, so it'd be like $48 along those lines. So there could be a pretty good argument that maybe I should have just bought Cisco at that time, and then right now it would have done really well and been higher. And that's one strategy I'm trying to dig a little deeper into. If I'm going to be doing the wheel, I do need to let it get assigned at times. So I could take a little bit more risk, make a little bit more premium, and let it get assigned. Then I could start doing covered calls. But without a doubt, I probably would have made more money if I had just bought it back in September of 2020. It would have been close to about a 25% return. So that's Cisco in a nutshell. And again, it's been real steady, easy to sell. It's something I do every month. I will, either roll it or let it close or expire. So Cisco has been a really good investment for me. Let's go ahead and close that. We'll jump to the next one. So, okay, this is Intel. Now, Intel's a little more confusing. Had already owned 400 shares, so I've sold a lot of covered calls, and the ones in blue are all the calls. So you can see since September of 2020, I've done a number of trades. So it looks like probably 30 trades. Don't know exactly the exact number, but I do know that I made about $3,000 since September, repeatedly selling cover calls and selling puts. So I'm not opposed to owning more. And then I've made, let's say, 15.29 in put premium. I mentioned that here. So about half and half of the premium in covered calls and half in puts, and that's primarily because of trying to get that close to that $150 to $200 premium for every trade. I had none expired. That's real interesting. So when I downloaded it, that was kind of a surprise. And I think it's because Intel's moved quite a bit. They've had kind of mixed earnings report. It's still a really good company, and it's paying over 3% dividend. But not to have anything expire, I literally have either had to close it or I've had to roll in every instance, especially with puts. I think with covered calls, I did early on have to roll them. I believe that Intel did get pretty high, and I had to do a few rolls. But a lot of them I just closed. When you see $1 or $2, usually that just means I closed it early versus waiting for expiration. If like I said, if I get that profitability with it, I'll go ahead and close it. And here, if you look, if the original price was 51.74. So this is like the opposite of Cisco. It's worth 45 as of today. When I looked at the market, and the market's down almost 700 points today, it's valued at 45. So this is probably between a 10 and 15% loss. So if I had bought more shares when I first started this, which I didn't need to, of course, because I already owned 400, I would have taken a 10 to 15% loss. So being able to make 1,500, which if I did a little bit of a profit calculation. So the possible loss was 668, and then if I did average two contracts, which is when I looked at it, is what I figured out, it would have been about a 1,300 loss. So in actually selling puts, I made $1,500. So you can see in this instance, I would have been much worse off if I had actually bought more Intel. Um, so it's very different than Cisco. So, and again, it's been a lot of trades, a lot of covered calls. I started out with primarily covered calls on the 400 shares. Then I started selling puts mainly because it dropped down quite a bit. So, so that's Intel. And again, Intel right now I think it's going to come back. I think it's a good company. They're making some plans to build more chips here. They did take a little bit of an earnings hit this last quarter, and that's partially why the price had come down quite a bit. And then if you look at the last one, it was in the money here. You can see I actually had to close, and I was doing three contracts, so I rolled it and made $199 just recently. I believe I did this. Well, I did it back in early February. So I made 199, but it definitely was, I think it was $3 to $4 in the money, and I rolled it, and it's still, with it being 45, it's still a little bit in the money. So I will have to manage it again when it expires soon. I guess it's, yeah, 4/14. Actually, it won't expire till April 14th, so I have a little bit of time to manage the three contracts that I do currently have out there for Intel. So Intel again, another great company to start with. I feel like it's at a bargain. To see a technology company paying over 3% in dividends is pretty good. You rarely ever see any kind of technology companies paying dividends. So, well, now let's move into Corning, and let me bring that back up. So here's Corning, and Corning, just like Intel, I did some covered calls. The ones in yellow actually is when I had to do some rolling while it was deep in the money. So between March and May, I did have to roll, and I was able to roll every time and make some profit. So let's see, 368, 235. So I made like $125. But it's worked out really well, and it pays a good dividend. And I really like the company. Their financials look really good, and it's been a good performer for me. So I've not had anything go bad for me. I've never had anything get assigned either way, either through the puts or through the calls. And let's see what the notes are. The original price was 33.70, and the current price is 39. So um, the current price is definitely higher. So this was kind of like Cisco. If I had bought it, I would have had close to, I guess, a 20% return. Yeah, that's about right. So like Cisco, if I had just bought it, I might have made an even better return. But a lot of these actually are calls, or are all of them calls? Yeah, so I'm getting confused with puts. These are all calls. So actually, this doesn't really matter since I did not sell any puts with it. Now I'm thinking about selling puts on Corning because it's been so good to me in the past. I really wouldn't mind owning more. And again, their financials look really good. So I've done 23 call options with them. 8 have expired, so a good portion have expired. And like I said, I've always only deep in the money at one particular time, and I was able to roll out of it. And like I said, I successfully rolled, and I made 23.49. So literally, if I think I averaged two contracts, so on 200 shares, that's almost like $11 or $12 per share. So even if that's really nice considering you add another $11 or $12 to that. It's been a really good standard for me, and it's been one of the best securities I have for selling options. So it's worked out well. All three of these are really good companies. Ones I encourage you to take a look at. Um, with Cisco, I've been primarily selling puts, And the one thing that, like I mentioned earlier, is to really be doing the wheel, I should be letting some of these get assigned. So I may take more risk. But of course, with this correction and the craziness going on with Russia, I may wait until we're back trending up once we've hit the bottom and look at taking a little bit more risk then. But at this time, I'm going to reduce the risk. I'm going to take a little bit less risk. But these are good companies to actually sell puts on even during a correction. But with taking less risk and doing a lower delta, then the prices I would look at, like right now, I think the latest covered call was around 50. And what was the current price? So I would look at the current price is 39. So I would look at probably between 32, $33, and that's probably what the delta would end up, what the strike price would you would end up with at that kind of delta. So again, three great companies works out really well for selling options. So thank you for joining me. If you have any questions or concerns, please add a comment below. I'm always interested in hearing what people think. And as always, I hope you have a wonderful day.